So prop firms have massively shaken up the trading industry. If you don't know what prop firms are and you're a trader, then you must have been hiding under a rock, because they're the biggest thing this industry has seen, especially for retail traders. If you don't know what a prop firm is, I'll break it down very bluntly for you. The way they operate is a trader would take a funded challenge, paying a deposit to be able to trade a demo account to make X percentage within the time frame needed to pass the first phase of a challenge. Usually it's around 8 to 10%, and then the second phase is normally around 5%. So that means that typically you have to make around 13 to 15% on this demo account, or both these two demo accounts, to pass the challenge. However, these challenges come with extreme rules. You can normally not lose 10% overall or 5% in one sitting on a day. If you break either of those rules in the challenge phase, you will lose the account and the challenge and not get your deposit back. And this is exactly how the majority of these prop firms make money, incentivized for you guys to lose. However, there is some light to these prop firms, as they do offer the chance to get funded with huge amounts of capital for a relatively low fee. For example, these days you can get an $100,000 account for about £300 or $350, $400. Now, as a trader, why that's so beneficial is because new traders like myself don't typically have loads of money to put into your personal accounts. So being able to put down a relatively small fee to manage that amount of money means that you can make a consistent amount of income that's worth your time. So if you stuck that same 300 quid, 400 quid into a personal account, in order for you to make £2,000 a month, you'd be having to make around 500%, which you're not going to be able to do consistently whilst managing risk. However, if you manage to get and pass an $100,000 challenge, you'd be able to trade with the $100,000 account and normally take around 80 to 100% profit splits. This is all still done on demo. How prop firms usually work is they'll pay you out of the failed challenges. So as much as they are incentivized for you to lose, they do still reward the very good traders that can approach the prop firms correctly. So like I said, if you manage to pass that $100,000 account, in order to make that same $2,000 a month, you wouldn't have to make 500%. You'd only need to make 2 to 3%, which is obviously a lot easier and a lot more consistent than having to make 500%. The difference is you can't compound it in the same way. So the way that you would compound a personal account is that more money you make means that your 1% risk, for example, would grow with the account. The difference with the majority of these prop firms is when you get paid out, your account is reset to where the initial balance is. So let's say you make, I don't know, $5,000 on a $100,000 account. You would take your $4,000 payout if it's an 80% profit split, or $5,000 if it's a 100% profit split, and your account would reset to 100K. Now that's really good because you get paid $5,000, but it also means that you can't compound the account in the way that you would a personal account. So what you do instead is either get more challenges, get more funding, or fund your own personal account, which is definitely what I'd recommend right this minute. In this video, I'm going to be breaking down how prop firms have changed my life and also the dark side of prop firms and how I've been basically a bit screwed over by a few of them due to just their own problems. Hopefully this can prevent it happening to you, but at the same time, there's not really any key clues as to which prop firm is going to go under or survive. So if you haven't heard, Funded Engineer, a massive Dubai-based prop firm, have recently been hit with a terminated contract for their systems. Their provider, FPFX, for their systems has claimed that Funded Engineer were faking payouts and stuff like that, obviously to increase trust in the brand. Fairly unethical if you ask me, and a similar thing was happening with my Forex funds. Not the exact same kind of thing, but basically my Forex funds were trying to make the conditions harsher for the good traders so that they didn't get paid out as much. And every prop firm was pretty much advertising that these funded accounts were actual live capital, when they're not. All your prop firm trading, even if you are funded, is always on demo accounts. Now, a prop firm can A-book certain traders so that their positions are being taken on live accounts as well, but majority of the accounts will be B-book, meaning that the prop firm directly loses if you're winning. Evidently, a prop like my Forex funds were extremely on the B-book side, as the good traders, they weren't wanting to pay out, or they weren't wanting to make as much money for. That's where you get the horrible conditions, like the slip to hell comments, which basically means that they're making the conditions harder than the actual market should be, as they were using their own broker as well. Now, I'm not here to rant on about how bad prop firms are, because they're not all bad. There are good prop firms out there, and they do give you a very good opportunity to become a very successful trader from not loads of capital. For me, my first ever funded account was with FTMO, who are still about to this day, and are the biggest prop firm in the industry. And being funded with them completely changed my life. It meant that even from my first $100,000 account, I was making very good money, which I could then funnel into further capital. I've done this with prop firms and I've also done it with my personal account as well. Again, I'm not trying to scare you guys away from prop firms, as they've changed my life and it's meant that I've managed to be able to pass or deal with 1.6 million funding, which realistically a 21-year-old who is literally a COVID tester would never have that opportunity otherwise. But for example, for me, the situation with my Forex funds, I even passed a 300k live and got a 10k payout live, meant that I never actually got paid that, and also got 500k taken away in funding. Looks like a similar situation could be happening with the fund engineer, but it's not finalized yet. Hopefully they come out the other side and I get my funding and it's not taken away like it was for my Forex funds. I'm gonna break down the exact route that you can use with these prop firms whilst they're still around, the potential for new prop firms and more regulated brokers, and also how you should approach them and how you should funnel your capital into prop firms and a personal account. Now, as a trader, you should never be jumping on the markets within your first couple weeks or month of trading with live capital or a challenge. Your investment should be in the skill set, whether that's demo trading, learning strategies off YouTube or learning a strategy off YouTube, learning all the basics, risk management, what a pip is, candlesticks, TA, all of this stuff, and applying on a demo account, building a data bank, and understanding if that strategy works or doesn't. Equally, a quicker route is to go down the side of a mentorship. Reason being is that if you're learning directly from the source of someone who has literally passed a ton of these accounts, shown that their strategy has worked and been able to demonstrate payouts, leaderboards, all of that good stuff, then that's only going to cut your learning curve in half. For me, I invested a ton of money into education when I first started trading. Well, actually after the first year, and it did massively transform my game. But once you have the skill set and you know the strategy you're going to trade, you've tested it, you know what works, and you're fully educated on how you should trade and manage your emotions on the charts, then I would recommend trading with a small funded challenge initially. So whether that be a 10, 20, 50K, whatever, if that's money that you're okay with losing. Because what you should be doing is getting used to experiencing live market conditions, managing your emotions with live capital at risk. And when I say live, I don't mean the accounts being live. I mean, you're trading with the deposit money you put down. Because then you'll start to feel the true emotions of a trader and deal with the true psychology of being in positions. If you're starting to see some consistency with those smaller challenges, then I would build up and go for a six-figure, if not multi-six-figure account. And from there, if you're passing them and making decent money, I would definitely be splitting it probably 60-40 towards a personal account and then more challenges and more funding. The reason I say that is because personal accounts conditions are a lot nicer. And also you can compound it nicer as well. And it's also your capital, so you can take it out whenever you want. The way that I trade challenges and funded accounts are completely different to how I'd manage a personal account. And the reason being is because in a challenge, you're trying to hit 15% most of the time. And I don't really want to be in a challenge for a long period of time because you can't actually make money from a challenge. So for me, I'm more aggressive. I'm trading with more towards 2% risk per position, because I want that to be over as soon as possible to a degree, obviously waiting out for the best positions possible. But then when I'm on a funded account, I'm very much only looking for a small percentage return each month, because at the end of the day, it's free capital and I'd rather preserve my capital and make sure that I'm not risking it too much and gain a free income ultimately. Then from that, I'm funneling that into more challenges and then also my personal account, which I've grown to a very good stage at this point. So from a personal account, you can compound that. So any trades that you are taking means that you have more money in the account, meaning that your 1% risk is slowly but surely increasing, meaning that your profits are getting bigger as well. Now, if you're worried about prop firms going, it's not the end of the world. You can still make trading work very much so with a personal account, or from getting investors, or from doing a fund, whatever it is. There is ways to make money away from prop firms. But right now, as they're available, I would probably still use them just to gain that initial bit of capital to start funding your own trading. From there, it doesn't mean it's easy. There's constant bumps in the road, but at least you've got a good amount of capital in multiple departments in terms of different funded prop firms, a personal account, you might have multiple personal accounts, you might have a fund at that stage. There's so many different routes you can go down by then, but the first hurdle to overcome is getting that initial high amount of capital to make a good percentage return. Or not even a good percentage return, make a decent percentage return, like a 1-2% a month, but that being a good enough amount of money for you to then fund other things. That's the route of becoming a good trader in my eyes. That's what I did. That's what everyone at WorkFX is doing as well. But ultimately, it's up to you. If you're completely new watching this, then the things I would stay away from are things like signals, putting money into accounts way before you've actually got the skill set, trying these challenges for the sake of it, and ultimately just wasting money and burning through money gambling, because that's not going to provide consistent results if you're taking this seriously. My plan for the rest of the year is to continue with funded challenges, focus more so on my personal accounts, because that's where I want to be, rather than just relying on these prop firms as they become more and more shady. But hopefully that side of things will be resolved with Owanda's new prop firm. They're a regulated broker that I have full trust in. If they do become a prop firm, that will be run correctly, without this shady business of not wanting to pay out traders, faking payouts and all that stuff. So yeah, there is some light at the end of the tunnel with these prop firms, and I would still say they're a very good tool to use, especially for new traders. So if you want to find out more information on these prop firms, how I'm trading, the techniques that I use, make sure to subscribe, because I'll be going through that consistently twice a week, every week for this year, hopefully. Also follow my Instagram, Rob Dono, Dons.FX and Woke Limited. And if you're seriously wanting to do this and learn from me or any of my team, message at Woke Limited or book a call with us to learn a bit more about the industry, your specific trading plan, how you should approach trading in more detail, and ultimately the route to the most sound skill set and most sound trading knowledge that you can get. Appreciate all the support recently. Have a good trading week. I'll see you guys later.